Well, hello again. Let's talk taxes. I'm Jeff Jr. from Trajan Wealth, and I am sure you're sick of seeing the presidential election advertisements as we move closer to the November election. It's hard to believe there would still be undecided voters out there that these advertisements could sway, but I digress. Today we'll be talking about the President Trump's tax plan and Biden's tax plan and how either could potentially affect your taxes and your investments. Trump has announced a robust tax plan for his second term if elected. But to understand where we could be going, we must understand where we're coming from and what's already been done. Now, early in his tenure, President Trump rolled out the Tax Cuts and Jobs Act in 2017 to spur economic growth while streamlining tax deductions for middle-class individuals. This was the most extensive tax overhaul made in 30 years for both business and individual filers. Corporate tax rates were cut to 21% from 35%, which is very significant. The permanent tax cuts for corporate profits, income from investments, and estate taxes meant more profit for American businesses. The tax reforms for individuals meant additional discretionary spending and anticipated retirement savings contributions. The act cut corporate taxes permanently but cut individual marginal tax rates only temporary through 2025. The act also removed the Affordable Care Act's mandate, which required all Americans to have health insurance or face a penalty on their taxes. Even though the act decreased the marginal tax rate, it increased the standard deductions for individuals and changed how local governments collected state and local taxes, referred to as SALT, state and local taxes. If re-elected, Trump's tax plan is to make provisions in the Tax Cuts and Jobs Act permanent. Unless Congress acts, most of the conditions will expire in 2025. Trump has commented he plans to move more tax relief for the middle-class workers through his Tax Cuts 2.0, which is a revised version of the act. Trump's tax proposals are focused on stimulating the U.S. economy, which has been devastated by COVID-19. Part of his proposal is cutting payroll taxes, which would increase employee take-home pay. He's also suggesting a $4,000 tax credit for Americans who travel domestically to help spur the U.S. travel industry. As of the filming of our discussion, one thing to note regarding Trump's tax plan is that none of the campaign documents so far have detailed a plan for the expiring provisions under the 2017 Tax Cuts and Jobs Act, though. President Trump's campaign tax proposals will fall under two categories that are outlined in his plan. Number one is jobs, and number two is end our reliance on China. There is said to be additional details in upcoming weeks, but we'll anticipate that there will be more tax cuts to help individuals and businesses, and a tax cut package designed to bring more manufacturing jobs back to American soil. Now let's talk about Biden's tax plan. Biden's tax plan has been released and is very different than Trump's. Biden plans to increase taxes for individuals making more than $400,000 per year and raise the highest tax bracket from 37% to 39.6%. This change would restore the top tax rate to the pre-2017 level before the Tax Cuts and Jobs Act. Biden also wants to cap itemized deductions for the wealthiest Americans at 28% and end favorable capital gains rates for anyone with income more than $1 million. These taxpayers will pay their ordinary income rate of 39.7% on capital gains and dividends if Biden's tax plan executes. Capital gains, remember, are earnings on interest. Currently, long-term capital gains are investments and other assets that are held longer than a year and are taxed at a rate of 0 to 20% depending on your ordinary income. If Biden's tax plan comes to fruition, it will also change the way inherited assets are taxed. Today, inherited stocks, mutual funds, or other assets' cost basis are stepped up to the value on the original owner's date of death. Heirs only owe taxes on the increase from the step up, not the original cost basis. Biden wants to eliminate this valuable tax break for heirs, taxing heirs back to the original cost basis. This could mean if you inherit money, almost 40% of it could go to tax. This could also create a multitude of problems for heirs trying to track down information that is many, many years old. Biden's plan isn't all hikes, though. He has proposed a few tax credits as well. The first proposed tax credit would include an $8,000 tax credit to help offset the costs of childcare, a housing tax credit of $15,000 for first-time home buyers, and a renter's tax credit to reduce rent and utility costs. Biden additionally supports expanding the low-income housing tax credit, which would provide incentives for the construction or rehabilitation of affordable housing for low-income tenants. He also proposed a refundable tax credit for low and middle-income workers who contribute to IRAs and employer-provided retirement savings plan. The hope would be to stimulate retirement savings for those folks. Biden's plan also provides for a tax exclusion for student loans that have been forgiven. Currently, if student loans are forgiven, the amount is treated as taxable income. Biden's plan also proposes catch-up contributions to retirement plans for caregivers of any age who leave the workforce for at least 1 year. Currently, catch-up contributions are limited to workers age 50 or older. Biden also would include in his plan a $5,000 tax credit for family caregivers. To encourage retirement savings plan participation, the Biden tax plan includes a tax credits savings to small businesses that provide their employers with an employer match. Biden's tax plan would also keep Obamacare, which is something the current administration wants to gut. Biden's plan provides for his clean energy revolution in the form of tax deduction for energy efficiency in homes and businesses, electric vehicle purchase, carbon capture and reduction, and supporting a carbon use tax. And lastly, while the Tax and Jobs Act of 2017 dropped the corporate income rate from 35% to 21%, Biden wants to raise that rate to 28%. He also called for a 15% minimum tax on large corporations. So as you can see, our presidential candidates look at taxes quite a bit differently, and this is just what they're putting on paper. My fear is if Biden wins the presidency and the Democrats keep the House and eventually win the Senate, the party's tax initiative may look completely different, and frankly, I am scared to death if that happens. That said, whoever becomes president in November will help determine if the current tax laws change, how your heirs pay taxes on inheritance, and what the corporate income rate is. If you're curious about how your investments and overall tax strategy may be impacted either before or after election, Trajan Wealth can help determine a tax-efficient strategy that's just for you. Until next time, thanks for watching, and make sure to get out and vote in November. Take care.